Welcome back, focused learners, to another deep dive explainer. Today, we're taking a hard look at something that absolutely shifts how we think about money in the modern era. We've synthesized some incredible insights from top financial minds and tech innovators to construct what we're calling the barbell strategy for 2025. Picture a barbell. On one side, you've got the ultimate defense, right? Protecting your existing wealth from inflation using hard, scarce assets like precious metals. But on the other side, we have the ultimate offense, generating massive, scalable new wealth using digital assets and artificial intelligence. It's a dual approach to really surviving and honestly thriving in today's wild economy. Here is our quick roadmap for today's explainer. We'll cover the 2025 Wealth Playbook, the precious metals surge, smart ways to invest, building offensive digital wealth, and finally, AI apps for recurring revenue. All right, let's kick things off with part 1, the 2025 Wealth Playbook. Okay, let's dive into this. We really have to understand the macroeconomic realities that are forcing all of us to completely rethink our money right now. $37.5 trillion. That is the staggering size of the U.S. national debt as we head into 2025. Now, you might be wondering, why does this actually matter to your wallet? Well, when a government holds this much debt, they have to pay interest on it. And if they can't afford that interest, what do? They just print more currency. But here's the massive problem with printing money at will. It literally dilutes your global purchasing power. Think of it like this. Let's say a market only has $100 in circulation, and there are 10 eggs, right? Each egg costs $10. Simple. But if the government suddenly fires up the printers and drops another $100 into the system, making it $200 in circulation, but there are still only 10 eggs, suddenly each of those eggs costs $20. Your money just lost half its power. This constant currency printing is the invisible tax of inflation, and it's exactly why hard, scarce assets are becoming so incredibly vital. Which brings us to part 2, the precious metals surge. So this is the first half of our barbell strategy, playing defense. Look at this shrinking timeline. It brilliantly illustrates the modern panic we're seeing all over the world. Historically, when gold hit an all-time high and then corrected, it took a really long time to reach a new peak. The first major recovery took 31 years. The next one took 12 years, then 4 years. Now, gold is hitting new all-time highs in a matter of months. This drastically shrinking cycle is driven by two huge factors: massive global economic and geopolitical instability and the sheer digitization of gold, which has just made it incredibly easy to access. People are rushing to assets that are currency agnostic, assets that governments simply cannot print out of thin air. And honestly, this data right here completely shatters a modern myth. We so often think of gold as this boring, old-school asset that our parents liked, while we're all focused on flashy mutual funds or high-flying tech stocks. But look at the data over the last 10 years. A top stock market index like the Nifty 50 returned around 13.5%. Gold? It delivered over 15%. Gold hasn't just been a safe harbor to park your cash. It's actively outperformed major equity indices. So yeah, it's safe, but its growth is anything but boring. And listen, it's not just everyday retail investors waking up to this fact. Massive institutions and central banks are hoarding gold at unprecedented rates. India's RBI reserves are actually projected to reach 880 metric tons by early 2025, and that's up from just 650 tons back in 2020. At the exact same time, countries like China have increased their gold buying tenfold, pulling in tens of thousands of kilograms in a single year. The smartest, largest financial entities on the entire planet are quietly building up their physical reserves. Let's move on to part 3, smart ways to invest. So if the big players are doing it, how do we do it efficiently? It's absolutely crucial to acquire these defensive assets without bleeding money to hidden fees. Let's break down your options. Physical jewelry? Honestly, it's a terrible investment vehicle. You lose out immediately to a 3% GST, heavy making charges, and you always have to worry about purity. What about digital gold apps? Well, they often have unregulated, really wide spreads between the buying and selling prices. Now, sovereign gold bonds, or SGBs, were historically amazing. They offered a 2.5% interest rate on top of the gold price. But the government has largely paused them because, get this, they were actually losing too much money to investors. It's true, they had to quietly pull the plug. So the absolute best vehicle for 2025 is for sure the gold ETF. They are highly liquid, you trade them just like stocks. They have incredibly low expense ratios, zero storage costs, and zero making charges. Funds like Nippon or SBI Gold ETFs let you park your money directly into the price action of gold with maximum efficiency. Now let's see how this defensive strategy reveals an even more fascinating opportunity: silver. Notice the gold to silver ratio here. This basically means how many ounces of silver it takes to buy 1 single ounce of gold. The historical average over the last century is about 67 to 1. But as of 2025, that ratio is sitting near 92 to 1. This massive gap poses a very, very lucrative question. Is silver currently incredibly undervalued? Many analysts believe that either gold is temporarily overvalued right now, or silver is preparing for a massive catch-up rally.
And the fundamental setup for silver is completely different than gold. Gold is primarily a financial asset. Silver, on the other hand, is an industrial powerhouse. A decade ago, about 45% of silver was used in industry. Today, that's jumped up to 60 or 65%. It is absolutely essential for solar panels, electric vehicles, 5G telecom equipment, and medical devices. This creates what economists call price inelasticity. When a manufacturer needs silver to build an EV or solar panel, they can't just substitute it with something else because the price went up. They must buy it, regardless of how high the price goes. That guaranteed industrial demand makes silver a highly volatile but highly potent defensive asset.
All right, shifting gears to part 4, building offensive digital wealth. Now, while gold and silver protect your existing wealth from that invisible tax of inflation, how do you generate entirely new wealth? You can't just play defense forever. You have to play offense and build digital real estate. But we need to clear up a major misconception right now. Selling an ebook or a PDF course is not the pinnacle of online wealth. That's a one-time transaction where you get paid, say, $47 once, and then you have to endlessly hunt for new customers. It is exhausting. The true leverage lies in the SaaS model, or software as a service. With an app, you don't charge once. You charge a monthly recurring subscription. A user pays $10 or $20 every single month because they are actively using the tool every day. It's the difference between chasing single sales and building an automated, compounding revenue machine. Let me give you a staggering example to put this into perspective. Think about the app MyFitnessPal. It's a completely basic utility, literally just a simple calorie and macro tracker. Yet, because of the power of monthly recurring revenue from its premium users, this single app generates over $150 million every single year. It started as a simple idea and turned into a wildly profitable digital asset. Which brings us to our final section, AI apps for recurring revenue. This is the final piece of our barbell strategy. Now, you might be thinking, that sounds great, but I don't know how to code, so how on earth can I build software? Well, thanks to recent breakthroughs in no-code AI, that barrier to entry has completely vanished. Literally, poof, gone. Using AI development platforms like Base44, absolute beginners are going from a raw concept to a fully functioning, sellable app in minutes, just by typing plain English. Here is the exact workflow. First, you just type a prompt describing your app. Say, a calorie tracker with daily goals and macro charts. The AI generates the entire functional software database and interface. Second, you prompt the AI to build a sleek, conversion-optimized landing page highlighting your app's features. Third, you instruct the AI to add a pricing paywall, locking those premium features behind a subscription tier. And fourth, you simply connect a payment processor like Stripe. No developers to hire, no massive startup capital, no coding bugs to fix, just pure leverage. Let's connect the final math here, because this is where it gets fun. If you use AI to build a niche productivity tool, a habit tracker, or fitness app, and you charge just $9.99 a month, you only need 1,000 users to hit $10,000 a month in recurring revenue. 1,000 people out of billions on the internet. Do that, and you've essentially minted a powerful, automated new income stream that sits perfectly on the offensive side of your wealth strategy. And really, this is the reality of the modern economy. You have the tools to shield your buying power with ETFs in gold and silver, perfectly hedging against global inflation. And at the exact same time, you have the AI leverage to manifest brand new software businesses out of thin air, generating serious recurring cash flow. So I leave you with this final vital question. Armed with this playbook, will you just protect your wealth in 2025, or will you aggressively build it? The tools are right in front of you. It's time to get to work.